the industrial sector, which is in the south and the southeast, and that's what they call tax war in Brazil. That's why when states of the north and the northeast trying to do this, but in state of Ceará, at the same time that we lower tax, we take those three other measures to fulfill new levels of government. So the final question, and I'm going to finish now, and so in that case, what can the federal government do to control fiscal balances of the states? What the federal government can do is try to manage to preserve fiscal balance of states by doing this. If states want to get a loan from the banks, either inside the country or outside, as we do, taking money from the IDB, from the World Bank, or whatever, the federal government only allows state of Ceará to do, or any state, if you are doing your homework with your annual balance. If the federal government decides to make transfers which are not constitutional defined, it's a voluntary transfer, the federal government analyzes if the states are doing their job in keeping fiscal balance in a good sense. So the federal government should be aware, with other things, false economic growth, strive for technological development, and of course specific regions in region inequalities, which means that income tax, for example, which is the same everywhere in the region, instead of have agency trying to promote development in the Northeast, it should do the following. Income tax in the South is 20%, in the Northeast is 10, and in the North is 6. The private sector would take the decision what is better to construct the new plan of the industry. So to finish, my final remark is, it is possible with tax competition, it is possible to reduce tax and reduce tax burden without affecting the supply of essential public service, particularly under the current conditions in Brazil, the three remarks that I have made in the middle of my presentation. Thank you very much for your attention.
Thank you very much, Mauro. That was really very interesting, and I think confirms what we heard from Professor Broadway earlier, that a decentralization and tax competition can breed innovation, and I think we've seen some very innovative policies that work. Again, we see a highly decentralized example from Switzerland, where we had the confirmation that tax competition does not reduce revenues, that it is a positive thing. And again, we have this confirmation from a state, from a very large, highly centralized country. So very interesting. We're now going to turn to our final presentation from, again, one of the regular delegates to the OECD's fiscal network on relations across levels of government. We have with us today Jose Maria Utande, who I think has a very important role, and I'm not sure how many countries have the position that he has, which is he's the Deputy Director of tax relations with sub-central governments in Spain, which means there's also a director to control these relations. But as we heard this morning, Pascal said there are some countries, some very big countries, where you cannot find such a person. And I think it's quite important, given the important role that sub-central taxation plays in most countries, that you have someone who can help coordinate. So Jose, I leave it to you to explain how you coordinate these things and how it all works in Spain. Thank you very much.
Thank you very much. Good afternoon, ladies and gentlemen. I'd like to thank the ITD for the opportunity of sharing with you the Spanish experience on tax autonomy and tax competition. I will structure my presentation on 4 sections: a general outlook of Spain as a decentralized country, I will then present the taxonomy of subcentral taxes in Spain. I will then give some examples of tax competition in our country to conclude with some final remarks. As you can see in this slide, under 1978 Spanish Constitution, we have become quite a decentralized country with 3 levels of government: the central, the regional, divided into 17 regions or autonomous communities with legislative powers, and the local level, divided into 50 provinces and more than 8,000 municipalities. An important feature of Spanish fiscal decentralization is that it's been a quite quick process. In less than 30 years, as you can see in that graph, more than 50 percentage points of spending have been transferred from the central to the subcentral level, especially from the central government to the regional government, the autonomous communities. This has placed Spain near some of the classic fiscal federations in terms of share of both revenue and spending in the hands of subcentral governments. This slide shows a picture of the current situation in the revenue and the spending side. On the right-hand side, you have that almost 70% of public spending in Spain is responsibility of subcentral governments. This does not include social security. That's important. And these subcentral governments account for approximately 45% of the revenue. This means that, as in other fiscal federations, there is a gap between the spending, which is allocated to the subcentral levels, and the revenue they get. This gap must be filled by the central government by the means of transfers, which are usually equalizing transfers. Another important feature we must bear in mind is that the Spanish fiscal federalism framework is an asymmetric